Hello, traders. It is 8:02 a.m. Chicago time. Thanks for joining me again this morning for another trader huddle before markets. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, it looks like the markets are pushing higher again. Risk on crude oil's leading the pack yet again. Crude oil's up over $50, the $50 mark today, trading at 51.20. Big pop overnight, followed by a continuation move that took us to the singles from December 17th. Again, up 2.85% currently. The indices are up. The DAX leading the pack. And the laggard today is the bond, the U.S. Treasury bond. So, with that being said, overnight, the expectation was for some sort of news from the trade deal, which didn't come through. And we ended up pushing to 25.87 and a quarter in ES. 25.87 even is the low of the balance zone that we were in late last year. Having a sneezing fit here, sorry. So that's where we are today. Looking at economic releases, I'm not seeing anything on the calendar. Except for crude oil. It is a battle today. Anyway, the market looks like it's, the ES looks like it's making its way up to 2,600. The next key area above. Let's take a look at what we expected yesterday versus what we got. So yesterday we were opening up in a gap up, and the expectation was for a test. The primary expectation was for a test of the prior day's high and the potential for a bounce higher. A bounce higher would have likely have taken us up to 25.97 and a quarter, 2,600. That's well within range of our close to close sigma. And the secondary scenario, which is what ended up playing out, but not to the extent shown here, the second scenario was for the market to struggle at the prior day's high at 67.50, bounce up and then fall through for a target of 25.57, and then a continuation to 25.49, 25.50. Here's what actually happened. Well, let's show it on the Renko. It's easier since the market's quieted down quite a bit. Here it is. So we open up in a gap, open auction, out of range. We test up, and then we cross through the opening swing. So the opening swing low is right there. The opening swing high is right there. That's where the initial tests up and down took us, and then we reverted back. We became responsive. The market had responsive sellers. The biggest rotation, as you can see down here, the biggest rotation at that point was down. That's a pretty serious rotation there. And then it pulled back to the mid against the OS with the open backing it up, and then it exploded downwards. This was almost too perfect a setup right here. Impulse down, pullback, continuation. And then the next target would be the point of control, this brown line right here, maroon or whatever that is. That is the most traded price for Monday. And you could see that we stopped right on top of it, pulled back a little bit, and then finally hit it. This is why I always run my scales or targets 2 ticks ahead of whatever level I'm in. And then it continued lower and hit the close. That was our key target. Remember, 25.50 and a quarter was the key target for scenario 2. And then from there, we started to get a little bit more bid. You can see that the delta is turning back up and is starting to mount an attack and head back above the 0 line. Remember, delta is 0 at the open, and look at where the open is. The open is way up here at 25.76 when the delta crosses the 0 line down here. So there was a fair amount of buying going on. Pretty choppy push up, fairly methodical. You can see that the profile had another profile with just an awful shape. I mean, holy cow. Profile after profile these days show profile after profile show that the market is really aggressively discovering, going through the discovery process, and there's really very little consensus, as I was saying. I think maybe during the Convergent webinar, I don't remember. Find me a day that has a Gaussian distribution anymore. This would represent balance. A Gaussian distribution is a classic bell curve histogram. We don't see those very often these days, and when we don't see those, it essentially, given the way the market is trading, we don't see those because the market is really, really actively discovering price. We don't have consensus. There are forces on both sides that are pushing in both directions. Note that once the ES pushed out of the prior day's range, it dipped its toes, could not get any interest back down into the range, and then it started to hold a tight zipper into the close, giving us a high potential for continuation higher. The point of control at the upper end of the range. At the upper end of the range, the expectation is it's likely to fall through to the upside, which it did overnight. Here's what we see. One of the tightest ranges in the overnight session for a normal day in a while. Still, volume is pretty good, 216,000. Yesterday's volume in the ES was around 1.3, 1.4 million, which is starting to fall in line with what is considered historically the mode or the most common value. And it's the overnight, that overnight figure is around 110 to 125,000 is the most common historically. We're still trading a lot more volume in the overnight session than that. But overall, look at this, another fugly profile. Showing that the market is pushed up. This almost behaved like a P-shaped profile without range. Why? Because we open, we test down, and then we push up, and then we balance, which results in a P-shaped profile, an indication of a market that is squeezing shorts before it finds balance. And so what's happened overnight is it pushed to 87 and a quarter and is holding sideways. With basically a market with a box type balance zone between 75 and 85, and that's our holding pattern. So this morning we are just above the prior day's range, and we're opening up relatively bullish this morning. I'm seeing strength across the indices as well as energy. To me, it looks like another one. A very likely scenario is this again. So that takes us to our current business. So looking at, let's kill some of these. No, that. key levels above us. One was tested overnight. Key levels above us are 2607, 2607 up here. 2607 was the low for the composite. And let me show you where that comes from. It's important to know what you're looking at. 2607 right here. 2607 is this balance zone that occupied the entire month of October, almost the entire month of October and November through the middle of December. So 2607 was key, and we held this price for some time until we dipped down into 2587. What's the high overnight? 2587 and a quarter. I can't wait for your answer because there's a 12 or 15 second delay. There would be a lot of silence. 2587, we hit 2587 and a quarter. We're trading 2583 and a quarter currently, but the next level up is 2607. So those are the key areas that I'm kind of queuing off of. 2631 above that. And so pay attention as that is likely to be the next target up. 2607 is up here. 2587 and a quarter right there. My expectation this morning is an open push through the overnight high. I'm expecting responsive selling down into the low volume node from yesterday at 2568 or so, consolidate, test lower, and then push up into the close and walk back up into the close. That's what I'm seeing today. Let me check the calendar again. Somebody had indicated that there's actually the FOMC meeting minutes. That's pretty significant. I'm not sure why it didn't make it onto the Thomson Reuters calendar. Very odd. So this is what I'm looking for, the pattern. This is basically shaped around yesterday's action. But it looks like as the market dips down, it advertises prices low enough to bring buyers in, and buyers have been stepping in. You could see that throughout. The market basically dips, pulls back, and then buyers step in, and so on. We saw that yesterday and throughout portions of last week. So the prices are being seen as cheap as they fall. The secondary scenario is we open up, we drift down into this point of control area, and then we're looking for to step out, and then this would show a lot more strength and get us tangled into the 2600 here with a goal of 2607 ultimately. That leaves the big sell scenario is scenario 3, which is cyan. Scenario 3 is we open, we squeeze whoever's left on the short side, and then we have a drive down, open test drive, consolidate, and then push through to break the other side. If we break through this 2546 area, which was an important pullback area from a while back, then we are likely to see this pushing quite far. I mean, if you are short and you see it crossing through today's value area, your target you really should be paying attention to 46. If it breaks 46, hang tight. It's likely to push through quite a bit. It might have another 20 points on it, and so this scenario here is very much in line with the bigger picture selling that we've had, and it would be the most for day trading. It would be the most the highest risk reward scenario. But what's likely to happen is we're likely to push back in and then see buyers and come back out. If we don't, then we're likely to target that 46 and then start pushing below it. Anyway, that's what I've got for you. One of the things I want to leave you with today, because I'm right on time, so I need to, I have a moment to say something. The thing I want to talk about just briefly is some trader wisdom. What are you doing today to set yourself up for success, right? So it's really important that you come in with at least one thing that you are going to focus on today that's been hounding you. You're looking to banish a demon, to kill an error. Are you doing that? Set yourself up for a win. That's really important, because for us to win tomorrow, we've got to do something today to set that up. So what are you doing today to overcome whatever obstacle keeps showing up and to improve your production and your outcome for tomorrow? So this is something that you need to focus on. Otherwise, you'll find yourself just spending time and not making any progress, which is very, very common in trading and very, very frustrating. But that's really the difference between you and someone who's under pressure in a prop shop or an institution somewhere and has to produce, is that person has to come in and do something today to set him or herself up for a win tomorrow. Are you doing that? Why are they doing it and you're not? You're trading the same product. You're competing in the same market. Good luck today, and I'll catch you tomorrow. Take care.